Okay, welcome back, listeners. I have with me Ashley today, who is about 2 decades of experience handling fraud. I'm really excited to have him on the call today. And I would love to know and learn about his experiences in dealing with fraud over the years. Welcome, Ashley. Would love to know a little bit about you before we go into the deeper call.
Thank you, Ravi. As Ravi said, I've been in the fraud space for almost 20 years. I've worn a lot of different hats. I started out as a rep nearly 20 years ago, back in 2005. So I've really seen changes in the industry. I've seen the evolution of fraud strategies, of fraud technology, and of course, the evolution of the fraudsters, which is probably my favorite thing to talk about.
Oh, wow. So I would love to know the evolution of fraudsters itself, because I believe um, most of the industry, in my view at least, is kind of playing a catch-up game, trying to evolve and counter the fraud itself. So basically, the fraudsters have been in the driving seat. So I would love to know a little bit about how the journey of the fraudster has evolved over the years, and what was your some of the experiences in your early part of your career, and what are some of the stories from now?
It's a real cat and mouse game, right? Like the credit card companies, the banks, the financial institutions, there's a cat, right? So the fraudsters are running and they're always a little ahead and we're just playing catch up. If you go way back to the early 2000s, the fraud space was very different as far as the types of fraud that you've seen, especially on from a credit perspective. Back then, there was less internet, right? There was less internet transactions. It wasn't as easy to make an internet transaction back then. You didn't have card on file. You didn't have Netflix. You didn't have Uber and DoorDash and all of those things. And counterfeits, those magstripe counterfeits where they got you at the gas station or, an ATM machine that had a skimmer built in on it. That was the fraud. And that was the majority of losses and where there was not recoverable funds. Over the years, the chip, right? That little chip you have in your credit card, that mostly put a stop to counterfeit credit cards and debit cards and, anything that used to have a mag stripe on it that has a chip. That you can't really counterfeit a chip, at least at this point in time. I'm sure they'll get there. And there's things that can be done, but not, you can't just copy a chip. So the most of the fraud, at least from a card space perspective, has really shifted to card not present fraud, account takeover fraud, and that kind of thing. Even, from an identity theft perspective, the tools that exist today have minimized that. So your scary third-party fraudster getting information on the dark web, at least from a physical card perspective, has been minimized to some extent. It still happens, of course. There are still holes, and that all depends on the technology of an issuer. But it's not what it was back then. And that's mainly education from issuers. It's technology. We know more about customer spending patterns and how customers apply for credit. So that's everybody very much more well educated. And the fraudsters, they don't stop, they shift. They go somewhere else. They're still going to get money. And there is more fraud today than there has ever been. They just do different products. They do different kind of fraud. They have their own new technology. It's a business just like a bank is a business, right? I mean, there's, a lot of these larger fraudulent groups or whatever you want to call them. They have QA. They have supervisors, that the guys at the bottom are getting, they're getting reviewed based on how much fraud they can commit and how much money they can send up the chain. So that's never changed. I don't think that will.
Yeah. So I totally agree about a fraud being I equate that to a startup, not like a large bank, but more like a startup, very entrepreneurial spirit and your nimbleness and your agility to find opportunities, a product market fit. So to say, even for a startup, that's a big thing, right?
Absolutely.
And that's one of the models that I totally believe in, right? And I also agree that, the customers and in general, the industry is also more aware of the fraud that's happening, right? And I also see the data from FTC from last year, from two, that the fraud is growing at a 50% pace. And this is a pace that I have not seen before. It feels like that the fraud is accelerating, right? So even with all the education, it seems like accelerating. What do you think is happening that is contributing to having higher rates of fraud in the latest years?
To some degree, the newer companies, your startups from a financial perspective, aren't putting the money in it yet into fraud as they are, they're trying to get big. They're trying to open up accounts. They want to make their own footprint. And deciding what their risk appetite is. Sometimes they don't decide that till after it happens. Not to mention some of the larger companies, the profits are going up. So the amount of fraud that is happening from a percentage wise can become more acceptable, right? It's all about the accepted fraud at a percentage of your profits, at a percentage of your sales. So as your sales go up, your allowable fraud goes up too, and more of it happen, right? So even though to say fraud is going up year by year, what does that mean exactly? There's more fraud occurring, but there's more sales occurring too. So just by putting a number out there of fraud, that's a little bit of a not true number when it's put out there to scare people or whatever, right? There's more people on the earth. There's more accounts open. There's more money in bank accounts, more fraud occurs. So what is that as a percentage of the overall growth of these companies or the overall sales and profits or however you want to calculate it?
Okay. So what you are saying is basically the growth at which the overall financial services industry is growing is far higher than the fraud itself. Is that what I'm hearing?
Yeah, I don't know if that's true. I'm kind of just putting that out there as asking the question, when you say, oh, fraud's at an all-time high.
Okay.
Yeah, but so are sales. So, really when you want to talk about fraud, you kind of want to look at that as an overall percentage of profits or sales, right? Or accounts.
Got
So
it.
they continue to grow. But on top of that, there's recovery from a financial institution. There's some degree of recovery, and standards change. What may have been acceptable as a fraud rate, 20 years ago may have gone up today as people are expecting more fraud. You want to get more accounts. That helps your stock. You want to approve more customers. It helps the customers. It helps you. So it's very possible. Some of these companies are just allowing more, because you're saying, oh, well, you know what? I want this many customers. I'm willing to accept this much fraud. So you loosen up your rules a little bit. And not to keep going on the long spiel here, but a startup that wants to get its foot in the ground may say, yep, that's okay. We'll take all this fraud. We'll invest in technology later once we, established ourselves. And at the end of the day, those percentages will even out.
Okay, got it. So you talked about the difference between, let's say, current, which is a neobank, vis-a-vis a large card issuer like a MasterCard or a Visa, right? I'm trying to understand the difference between fraud as a business objective, or what are the KPIs that companies look at. In a company like neobank, would it be different? The approach to fraud, would it be very different? Let's say because there are current neobanks which are Series C, Series D. There are companies which are Series A or earlier, right? I can understand in the earlier stages of the business, you are trying to prove your product market fit. But post Series C, Series D, you want to protect your business, right? So I do want to understand what is the perspective in approaching fraud. What are the kind of KPIs that these companies look for vis-a-vis a large company?
So your KPIs, they're there. Every bank, every financial institution, there's not a whole lot of information sharing from bank to bank. So, really for any company, you're kind of reinventing the wheel when you attack fraud, right? And it's important to bring in people with experience, someone who's worked at another company, because the knowledge base from one company to another can vary widely. You take a company that doesn't see the same type of fraud as a company that sees a lot of different types of fraud, right? So those controls aren't necessarily in place. It's all about having the right controls in place. There's no stop the fraud button. There's no product that stops it. It's about having the controls in place before it happens and reacting when it happens. One company's customer base may be wildly different than, company number two's customer base. So customer two opens up a new product that, maybe company one has had for years, right? So you don't think this particular fraud is going to happen. For instance, a prepaid debit card, those were all the rage back in the mid 2000s. There's not a whole lot of those left, right? There's a couple of your main ones, but there's not startups coming out left and right to give you prepaid debit cards. If there was money in it, if there was still stuff to be figured out, they would be popping up all over the place. And the idea with the prepaid debit cards are there's not going to be fraud on this product. You have to put your own money on it. Well, how could there be fraud there? And that actually is the worst, a fraud product that exists because of all the avenues of fraud that you commit. So, you haven't seen it before. It's easy to think that it can't happen. So a lot of companies, I think it's just new, and they're just brainstorming from scratch on how to stop it. If you don't have these outside consultants or people who have actually seen it or actually know what can happen. If there's a hole, the fraudsters will find it. So if it exists, somebody's going to get it. Maybe not 6 months from now, maybe a year, when someone finds that hole, but if it's there, they'll eventually find it.
Got it. So you talked about a few things here. One was about reinventing the wheel itself. So I do want to come back to that question itself. I do want to understand one part. I remember having a conversation with one of the fintechs a couple of years ago, and his biggest worry, and I was asking him, what's the biggest worry that keeps you up at night, right? And he talked about fraud being his number one priority. It was a digital lending company, which was doing very small time lending. The product was a small lending with a very small tenure as well, right? And what he was talking about is, my biggest worry is my product is so seamless that people can come in and avail the product in real time and automatically. And so if I have a hole in the system, if somebody figures it out, by morning, I'm worried that my bank could be emptied because it was a lending product. And he was very, very clear about, I'm not really worried about credit risk. If somebody's not paying me $500, I'm not really bothered about that. That doesn't keep me up at night because we have models running for that. What I'm more worried about is a hole that is found. We have not seen it, but somebody has found it. And by morning, they have talked about it, because there are blogs where people talk about how they fraud companies, right? And so by morning, my bank is empty. So that was his biggest worry. And I don't see that kind of worry in larger companies, because larger companies in general are a little more inefficient. And that inefficiency helps in fighting fraud as well. And so I want to understand, it feels like a lot more desperate for smaller companies than larger companies. I see in larger companies, you're talking about fraud loss vis-a-vis profit, and you have a ratio. If it's not about that, the top line is not bothered about it, right? So I wanted to understand this particular difference in small companies. Is this something that we can help? And is this something that you observe as well?
Absolutely. In a smaller company, or in a medium-sized company that doesn't invest as much into the fraud technology, you invest more into your overhead and your people. So it's a lot easier, and it's really just by necessity that you have more eyeballs on what's actually happening, right? Even the smaller, medium companies, their goal is to automation, right? That's where they want to be. They want to have as little human interaction with process as possible. The downside to that is nobody's looking. That's the upside to your smaller companies. I don't have the money to spend on a $100,000 a month, fraud platform to look for this stuff or have the computer find it. So you have manual intervention.
Mm,
You see fraud occur, and maybe you just build manual reports that would find what you see.
mm,
You
mm,
do that, more fraud that you haven't seen, you revise, and have
mm,
eyeballs on everything. So when something happens, you see it.
mm,
Uh, and you see on these exception reports, you see exceptions to things
mm,
that you haven't planned for.
mm,
And when you get a little larger, there's less eyeballs on it. You can still have those exception reports. You can still look for those exceptions, and you certainly need to. But
mm.
when the volume is a billion accounts or a billion transactions,
Yep.
I couldn't even contemplate on how you would possibly manage that,
Okay. Got it.
especially for what you said, those little things. And maybe they don't care. Maybe they don't care unless they lose $1 million in a month, because profit is what it is, right? It's a percentage of your overall sales. So maybe $1 million to lose, it's okay. Maybe you don't care until it's 2 million.
Okay. Got it. Got it.
Smaller company might care when it's 10,000.
Mm, mm, mm. Yeah. Okay. So also you talked a little bit about, how one single company not knowing what is happening with other company, and you need people coming from other companies to tell you about what are the kind of challenges or the kind of fraud that the other company is seeing, right? So I'm trying to understand here, is that the only way that we can learn from others' mistakes or other fraud that we have seen? Is there better ways to do this?
Networking is the way to do it, right? And even in, something like LinkedIn, I mean, there's not a whole lot of digital networking platforms that people take seriously, right? I mean, LinkedIn, people take it seriously these days. You get jobs through there. And it's basically turned into Facebook for corporate America, right? But you see interesting stuff on LinkedIn.
Yeah.
There's a line where, as a fraud person, you don't want to tell the fraudsters, what they're up to, right? You don't want to tell them how to evade, the fraud investigators or fraud processes. So it's not like you're going on there and just posting stuff online about that. But the networking aspect, it's important that, you can call a person, and say, hey, what do you know about this? I'm seeing this occur. We have fraudsters, you doing this, hacking into our online accounts or whatever. But there's not a handbook of best practices, right? If you want to learn about management, you can go to Barnes and Noble or Amazon, and there's a whole section of it. There's not a whole section of preventing fraud. And again, you don't want to put it all out there on how you do it. I mean, it's out there, but you have to go look. And especially in a smaller company, you only know what you've seen. You only know what you read about and how much is out there. To your point, there are blogs for fraud prevention and fraud investigators too. So that's, something important to be a part of, or at least go look, or at least know where to look or what questions to ask. But you haven't seen it. You might not believe it when it happens. You might, no, they're not doing that. They're not, our customers aren't reading off our OTPs to the fraudster. Why would they do that? They do it all the time.
Yep. Totally. I agree with that, right? I also noticed that there are quite a bit of false positives when you also have, even with expensive solutions as well, even with machine learning being there, I still see quite a bit of false positives as a problem statement that I see from fraud analysts, right? So is that a prevalent problem, or is there a way to counter the false positives that are generated by this fraud monitoring?
It's a large problem. That's all business you're losing, right? Just the friction, even if, you have a mitigation solution in between, say, approving an application and looking at it, right? Making a simple purchase off the internet. How often do you go to buy something off of the internet that's an impulse purchase? And for me, I'm going to buy some goofy thing I just had advertised to me on Instagram or something, like, oh, that looks cool. Oh, but they don't take Apple Pay. My credit card's in the other room, and then I don't make that purchase because that amount of friction stops me from making that purchase, right? How many people, but if it has Apple Pay, all I got to do is click my phone button twice. Cool. I just made that purchase. I'm going to buy something that I'm going to use for 5 minutes and put in a drawer and forget exists, right? The same is true from the a credit perspective, right? I may be financing something. I may decide to take out a loan. I may be going to buy a product, and that little bit of friction on that impulse purchase. And let's be honest, most of our purchases these days on the internet are impulse purchases, right?
Yeah.
Not necessarily stuff we need. We're fun stuff, interesting stuff is what we're purchasing. And that smallest amount of friction there can stop that purchase. And that's a lot of money being lost over the entire piece.
Okay. So the false positives from a client's perspective, right? From the fintechs or a bank's perspective, how are these dealt with? So the way you answered it, I'm assuming that the false positives or the alerts that are generated are cleared in real time, right? Or the transaction is held until these are cleared. But sometimes it happens post the transaction is happening as well, right?
Correct.
Okay. So in such cases, what happens?
There's a lot of manual review when you get there, right? And that's all about the particular company and how they want to do it, right? I mean, if you look at, a regular customer decides that they're an adult now and they need an adult email address, right? When they were in college, their email was coolguy420, at gmail.com. And now they're an adult. So they need to go create a Gmail address that has their name on it, right?
Yeah.
All of these email addresses are looked at and said, when was the last time you, Robbie, created a new email address, right?
Yeah.
Probably a long time. I've had the same one for 10, 20 years. A new email address, the fraudsters love, right? They're going to try to establish their email, but it might not necessarily be connected to Robbie, for instance. So when the credit card company looks at that, that's a flag. You get a new phone number because, you just get a lot of spam calls at your phone number. And you know what? You don't have enough contacts that it's worth it. You're going to go get a new phone number. Phone number takes a minute to show up for you. You start running LexisNexis or any of these phone number searches. Oh, that's a new phone number. We don't trust this consumer. We may outright decline it, right? We may want to do a manual review of something like that, but that's just the customer's actual activity that just looks like a fraudster.
Yep. So I also see the other side of this equation, right? And I'm spending a little bit of time here because I see when I'm researching about some of the neobanks, some of the biggest complaints in the app, for example, apps have comments and reviews, right? So some of the biggest common complaints that I see there is, my account has been suspended because it was suspected fraud, and I'm trying to get back access to my own account, and it is taking a long time, right? So obviously, I'm assuming that one of the high risk activity or a high risk event, like a phone number change or email change, has happened. Somebody attempted it, and it was flagged, and was probably suspected, right? So I'm trying to see what is the best balanced because I'm sure these activities are done by genuine customers as well, right? And also is done by regular customers as well. So while it could generate alert, right, for both of the cases because it looks similar. How do we make it less friction for genuine customers who are actually genuinely trying to do that?
And I don't know if you can. I mean, it's not an exact science, Ravi. You're trying to decide how many customers of yours are you okay with inconvenience, right? Balancing that with the fraud because they don't know it. It's all of these systems, right? And no matter how good your fraud tools are, somebody's going to beat it. Yep. So are you concerned with only, we're not going to get beat by the low tech fraudsters. And we're okay with getting beat by the high tech fraudsters, right? It's just kind of that balance. We talked the other day and, there are all of these voice recognition tools out now where they say, oh, you know what? We can verify your customers by their voice. So that, hey, there's no fraud there. Well, AI can now kind of recreate your voice by just a couple words. I could call you up, Robbie, and say, hey, Robbie, get you to say 5 words, hang up on you. And now I have your voice, right? So now I can your verification. And that's not worth it for someone's account that doesn't have a lot of money. It's worth it for someone who does.
Yep. Yep.
You know, those tools aren't owned by the low-level fraudsters. They're owned by the high-level fraudsters. In 5 years, well, now probably 8 years, your lower-level fraudsters will be able to do that. They're looking for automation. So if they can automate that 10 times, right, they can call Bank of America 10 times at the same time, get your voice on there and drain your accounts, right? They can boot phone numbers. Now your low level fraudster can do that. 20 years ago, it was a little more difficult, but now you can do it.
Yep. Okay. On a related note, on the same aspect of customer experience, right? Most of the time when somebody is frauded themselves as a customer, they reach out to the client or the financial institution and say, my account has been frauded, or somebody has taken money, or the company themselves have called, right? And most of the time, it's a mix of challenges happening, or not challenges, but problems on the company side, as well as some things that the customer also has done. For example, you talked about people giving out their OTP to other people, right? So there is always responsibility on both the sides. And most of the time, as a company, you don't have a face. And so it is easy for people to blame you as a company that, it is your problem. You have a lot of money. Why don't you make me whole, right? So how do you handle in this?
They say that exactly. They use those exact words.
Right. So how do we handle this kind of situations? Because on one hand, you could come in and say, it's your problem. I have logs in my tech to show you that the problem happened on your side, right? While you may win that battle, but you may lose the war, right? If it happens too consistently and you end up losing trust with your customer base itself, right? So how do you balance this requirements from customers?
In that case, the customers are right. It is our problem as the financial institution. You might push back a little bit just from someone being so honest and real, but at the end of the day, look, that's true. They're right. It is the responsibility of the customer. So, it's easier today because more customers are educated and they expect that. They aren't as aggravated. Some are, as they were 20 years ago when their card gets declined because, especially with the advent of text messaging, technology, and I can text somebody and say, hey, did you do this? They almost expect it, right? If you go and spend $1,000 at Walmart or something and you never do that, you are not surprised when you get declined or you get a text message or a phone call. That's not true of all consumers because all consumers are not educated. So you just have to be nice and deal with that. And, you might get chewed out by a consumer that doesn't like that, but that just is what it is. The harsh reality of that is, well, go to another bank. It'll happen there.
Yeah, totally. Yeah. So I've seen some customers also, doing this jumping ship and then coming back and then jumping ship again. So I've seen some customers doing that back and forth journey as well. So I also see one specific community, which is the elder fraud, basically the older people above the age of 60. While education may be happening to the general population, the incidence of fraud on the older population is generally a lot more higher. If I remember my statistics correctly, almost 60% fraud is targeted or happens with people who are aged 60 or more. So in that case, right, because they're generally also not in line or not in sync with the technology changes as well, it becomes very hard to even blame them that, it is your problem.
Absolutely. It's just that. Technology has passed you by so much, and you're not on the internet all day or reading articles about scams and seeing all of that happen, that you just don't expect that, right? The Social Security office calls you about a number being compromised. Sure. Right. That's why would someone call and say that? It's a little weird that they're asking you to go to Walgreens and buy a gift card, but you don't understand technology. Maybe that's what they do.
Yep. Totally. how do we fight this kind of fraud? Is there a way? Is there a best practice that you've seen after working with multiple companies? Is there is there a way that we can stop this?
You will never, it's like you said, the war is going to go on forever and you can win battles, right? I mean, education is the best. Educating your parents is the best. As someone with some elderly relatives, and my elderly relatives are smart, right? But
Mm.
it terrifies me because this happens to smart people all the time. You hear these stories, and you think, oh, that'll never happen to me. These people are just not real bright here, right? But let that happen when you are in the middle of another stressful thing. When you
Yep.
hear these stories about people getting ripped off by the Social Security Administration scams or giving out their information on the phone, somebody calls them while they're cooking dinner. They're trying to make spaghetti. They've got, their noodles are boiling over. They've got garlic bread in the oven. That's going to be, if they don't take it out at the right time, it's going to burn. Their spaghetti sauce is boiling. They've got two kids screaming in the background. You are not focused on your conversation if you answer the phone, right?
Yep.
Your brain is in 7 other places. And when that happens, it doesn't work 100% in every direction, right? It's, if you're having a fight with your spouse and somebody calls in the middle of it and it's a credit card company and they need to know the last 4 of your social, your brain isn't working at full capacity. Maybe you just, spit it out. And then 10 minutes later, after everything has calmed down, wait a minute, that was weird. Oh crap. And then by then you realize you've lost some money. Some accounts have been opened up in your name. You handed out information that you shouldn't have handed out because it's social engineering. It's psychology being used against you by the part of the fraudster.
Yep, totally. I mean, I totally agree with the fact that, believing that it doesn't happen to me is not something that is. So, for example, just to give you an example, I always believed that I was smart enough to figure out if somebody was trying to fraud me, right? So this was, I think, probably 2020 during the middle of COVID. I was living in Singapore, and I had just changed my internet service provider, right? And I was like waiting for the internet service to be activated. So I was kind of expecting a call to come in to tell me that it is active. And I was traveling, and I was like, not even stressed, by the way. I was like normal. I mean, like, it's just that in my back of mind, I'm expecting a call, right? And then suddenly I get a call saying that, I see unusual activity in your account, da 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 da. And I'm like, huh, that is weird. I just got my internet installation, right? Because I didn't even suspect that to be fraud because I was actually expecting it, right? Only 3-4 minutes into the call did I realize that this was actually fraud because they started asking me to go to my computer, to go to my MS config to actually set something up, right? So that's when I realized that this probably is fraud. But that's when I realized, and by then I've been tracking fraud for almost 3 years already. And then I realized that it's a coincidence of things that actually brings together fraud. It doesn't mean education alone. It means circumstances as well. And again, as you rightly pointed out, right? It can be stress. It can be many other things. This also reminds me of my airline analogy. So I came from the aviation background. So there, a crash or an incident doesn't happen with a single incident. Only when you have few things aligned together and have a whole at the same place will it actually eventually lead into a fraud. And you can't actually predict it because aviation is a very regulated industry for almost 50-60 years, and you still have incidents happening every year, right? So that is one of the agreed methods that how people find a hole. I mean, my example was perfect because 2 things unrelated but happened, and then eventually I could have frauded, but I was not, thankfully, a frauder itself, right? So I totally agree with that, right? So I do want to go back to one of the things that we were talking about before was about, each company, each financial institution is essentially reinventing the way, and we are not actually fighting this together, right? Is there any best ways to fight this? I mean, talked about, having people moving across networking, etc. Is there better ways to fight fraud and fight fraud together, essentially?
Probably. And I would bet a lot of people in the industry would say, but I don't know what that is.
Mm.
I think that's the reality. They might not want to admit that, but I think that's the truth, right? Because we all have such different types of business. It's really easy when you're in a type of business and, other companies are doing the exact same thing. You know somebody and you can call them and you can go to a conference. I mean, to me, it's the networking aspect. It's going to a conference, finding someone you have something in common with. Hopefully they have more experience, or if you do, pass it down. But there's not a best practices manual out there for your business that you are writing from scratch.
Got it. I also want to understand a little bit about tech as well. And you talked about this, that how tech has transformed over the years. I do want to understand how tech can help, or also how tech can enable fraudsters to generate more fraud behaviors, basically, right? So I wanted to understand what is the role of tech in this whole ecosystem.
So probably the best thing is verification, right? From a technical perspective, that's what we can check. If you think 20 years ago, there just wasn't as much information out there about, right? It was a little harder to get. It wasn't as accurate. Hey, it's still not all that accurate. But now at least I can, say, check your email. I can check your IP address. I can check your phone number and see how long you've had it. In some instances, I can look at your driver's license number and see if that really goes to there's a lot of that. But like I said earlier, with customers' information changing, you still have false positives in there. I think from an application perspective, to some degree, there's less fraud in certain products and more in other products. It's just very specific to that product. If I'm mailing you a physical card, where is that card going, right? You have to have that physical card to commit the fraud, if that's the case, right? So there's a thing in there that the fraudster has to do. If you don't have a physical card and you're able to just make an application online, I can get a VPN that says I'm where you live. But some companies have systems that can tell you if you're using a VPN. And if you are using a VPN, maybe you're at the office. Maybe you're just at work using your work VPN and you should be working, but you're shopping instead.
Yep.
Right. Yep. All of those, that's to go back to your false positives. There's so much things that consumer can do that mirrors a fraudster. Right. And I mean, that's helps the fraudsters and it hurts consumers at the same time, but that's the environment. It's just kind of tough.
Yep. Okay. Got it. I also realized that, you've been in the space for 20 years, right? I would love to understand, what makes this space so exciting for you, as a person, right? I mean, 20 years, I have never stayed in a company that long, right? What kind of motivates you? What's so fun about this particular industry?
Robbie, I like to be surprised. I like to see something I had never thought of before. If I watch a movie and I can predict what's going to happen, it's boring. 5 minutes into it, you know how it's going to end. You know how the plot is going to go along. That's not a very good. My favorite movie, and I don't know if you've ever seen this, is The Prestige.
Yep, I have. Yeah,
and I walked into that movie because I was bored. When it was in the theater. And I didn't think anything of it. I thought, magicians, and I just was like, did not see the twists coming.
Yep.
And that's my favorite movie simply because it fools me.
Yep. You could not guess if Bale was 2% or a single person.
Don't give it away. Some people haven't seen this, Rob.
Oh, sorry.
But right. I like to be surprised, and that makes me excited. To see, every day is kind of something new. So much of fraud, it's, you could only be so ahead of it, right? You basically have a lot of baseline rules that work to catch your basic stuff. And from there, you have to be on the lookout for any stuff, right? So you are playing catch up to some degree, and you're always going to be doing that because you have to see it happen so you would know that it's going to happen. So to find a new type of fraud or to find out, wow, they're doing this. Whoa, I mean, that's really cool for me
Yep.
to see
Yep.
something like that happen.
Yeah. So it's fun to see a master in their action, basically. I mean, master being here,
Exactly.
the
You get to
fraudster.
back
Yeah.
that.
Yeah. Yeah.
Absolutely.
Totally. It probably is also accelerating to, I mean, because it's also a really, as you even started out with that phrase, cat and mouse game, and you're always learning new things. So can I understand how did your journey start? I mean, you currently are leading a fraud team, assuming, so can I understand your journey? Like,
I worked in a retail job prior to coming here, or getting into the industry. And this was in the late 90s, early 2000s. And basically this was in the days when people wrote checks, right? So people would buy things, they'd write you a physical check for an item. And there was a lot of fraud in that. And I was really good at catching. I learned a lot of it, not on purpose. I didn't go in there and say, I'm going to do this. But I saw what they did, the distractions, the things that modern fraudsters do on a one-on-one, one-to-one person basis, right? Just like when we were talking about, the caller fraud and that kind of stuff. Somebody's writing you a bad check. And I'll tell you a story. One, I was standing at the cash register and I was 18 years old. I was just staring off into space, right? 18-year-olds, right? What do they know, right? I didn't know anything. And these two beautiful women come through my line. Beautiful. Eastern European. They had Eastern European accents. And they're buying a big stack of CDs and DVDs. People bought this back in, the year 2000. Nobody buys that stuff now. And they were all expensive. $20 for a CD, $30 for DVD. And they're buying stacks. And these two beautiful women write me a check. And then one of them says to the other, in his Eastern European accent, my diarrhea is so bad today. Oh no, I don't know if I can make it to the bathroom. And this really happened. And I'm standing there and I take that check code real quick and I run I want to get them out of my line as fast as possible. This is disgusting. And just as I run the check and I pick it up, I see there's some whiteout.
Oh, wow.
So they've whited out some of the numbers because those old check tools only looked for bad numbers in their system. So if you covered up a couple numbers, that wasn't in their system. So I just said, their check was not declined, but I didn't push it through yet. I didn't hit the enter button on the keyboard. And I just said, your check is declined. And I go, okay, thank you. And snatch it out of my hand and run out the door. And that was my first experience with that distraction. And I was just enamored with that. I was like, wow, they were beautiful. They told me something gross. And they almost got me. And I just found that fascinating.
It sounds like a first love. Basically, it sounds like the whole scenario that I see, right, in the movie, that you have the meet cute between the thing that you fall in love with. In this case, you're falling in love with the industry itself, right? It seems fascinating in itself, right? Yeah. So this is more or less what I wanted to discuss. Anything that you want to share from the fraud industry itself? Any stories that you have come across to the audience itself?
Yeah, and I want to say, going back and you're talking about your friction, your rules, your false positives. First party fraud is a really big thing, right? Like we're talking from the perspective of the bad fraudsters, stealing your identity or taking your money. But something always to keep into account from a financial institution perspective, a lot of fraud is committed by the consumer, especially in the kind of startups, the fintech, we want to open accounts real quick, right? If you are with a bank and you have your mortgage there, and you've been a customer for 20 years, you're probably not going to commit first party fraud. But But these accounts where these companies where you don't have these deep relationships with, there's such a problem with consumers going into it, either planning on committing fraud from the get-go, right? I mean, I read on the internet how I can buy all the stuff and then tell the company it wasn't me, it was fraud. Have so much of the, oh, I didn't pay that credit card bill because I was in a bad position or whatever, looking back and going, I bet I could just tell them this is fraud. So the credit card company, your banks, your loan companies, your retail financing, they are not just fighting your bad guys, your third parties, your identity thefter. You also kind of got to keep an eye on your customers, right? And you only have so many resources. Not only do you have to say, did the customer do this, but did the customer do this and did they intend to?
Yep. Totally. Got it. Thank you. Thank you so much, Ashley. Thank you for joining the podcast today. And would love to see you again some other time. We will continue to do this podcast itself. And thank you so much. Thank you, listeners, for listening to the podcast. Please do subscribe to our podcast and also like our company page on LinkedIn itself. Thank you. Have a nice day.
Thanks, everybody.
Thank you.